Hi, everybody, and welcome back to Real Talk NYC Real Estate with John and Jonathan.
Welcome back.
Thank you.
It's been a long time.
It's great to see you.
We got a lot of new things to talk about.
New things.
Let's hit on them quick.
New company,
Yep.
new team, new team name, GVC Real Estate.
New partner.
Gazdaska Conlin has transitioned to GVC,
Yep.
and it's
The
exciting
beloved
for us.
Verdiglione.
That's correct, who's
Yes.
not on this podcast. But our
One day,
team-
though, we will have him here.
Yes, sir. Team has expanded into New Jersey and into Florida, upstate New York, and new podcasts.
New material to work off of
Correct.
in the podcast because of the switch to, as you can see behind us, Douglas Elliman. Working off new stats now, directly from Douglas Elliman's latest report, which is prepared by Jonathan Miller. He's a personality and a statistician, very well known and respected.
Mhm.
So I'm excited to have that sort of as the backing of the stats to talk about.
Let's dive right into the quarter. Buyers and sellers are starting to see eye to eye. We saw increases across the board, and mortgage rates
Increases and decreases that prove
Increases,
that point.
correct.
Yeah.
So at the end of Q2, mortgage rates were just a little over 6.82%.
And even since then, we've seen even further decrease in rates.
Yes, sir.
And increase in the confidence that that's going to continue to happen.
If we look again at the increase in mortgage sales, it's indication that buyers are not waiting for the lower rates to come around.
Yeah.
And the sellers are negotiating, which we'll talk about in a minute. Inventory is starting to become absorbed, which is great.
And now we have the switch from Biden to Harris. What does that do for our market and the confidence in our market in a heavily Democratic city?
Yes.
We don't know. It'll be interesting to see if it pushes that trend along to last longer than just Q1 to Q2. So next we'll talk about the number of sales. So the actual deals that have closed, 2609 for the quarter, which is actually up over the first quarter. So that's not a surprise, up 31%. But the interesting piece is change year over year. So versus Q2 of last year, we're up 12.2%. Very clear statistic showing that there's some confidence increased into the market from the buyer's perspective,
Right.
and sellers saying, okay, I want to transact. How do I do that? Everything else remaining equal, I got to bring down my price to a more realistic number that's going to be absorbed.
One last note in terms of that second quarter number, it's only 5.8% below the decade average. We're now seeing far more sales being done.
Stretching out statistics over 10 years, okay, this is what it is on it from a 10-year. You're absorbing in that within that statistic odd years like 21 or 2020. So it does give us some basis and the best basis of comparison.
And in retrospect, I think that it's healthy. The market's it's getting healthier and healthier, and people are not running for the hills, which they started to do at 7 and 8% interest rates, which were back when we've already mentioned it. When I started selling real estate, they were 9%, coming off of that into the 8 and the 7% range.
It's finally acknowledging, let's say, that a 3% interest rate on a 30-year fixed mortgage is an unrealistic expectation to borrow money at that level.
Course. Yes.
And we may not see that again in our lifetimes.
Correct.
Yeah. So, and certainly not for the stretch of time that we had those sub
correct.
3% or around 3% interest rates. So I think buyers are finally, listen, it takes a while to accept. That's an acceptance, because like, oh, if I would have bought this 5 years ago or whatever, 3 years ago, I would have gotten a 3% interest rate and my payment would have been X. Well, yeah, if I would have done a lot of things 5 years ago, how much better I could be right now if I had a time machine, could go back and make different decisions. So it's just an acceptance thing.
The number of sales with price changes fell to 26.6%. from 39.4%, which tells us that the sellers coming into the marketplace are pricing much more realistic to the market.
Yeah, again, acceptance. Now, 26% I would say is still probably high, but because you're not everybody's same level of acceptance, nor do they need to be, but definitely a huge shift of 14% difference. That's again a very
they're waking up.
Statistic, yes.
Waking up, yeah. And I think from our point of view, we're counseling the sellers who are refusing to reduce their prices if they do receive a significantly much lower offer, to truly counter the offer,
At least
to
engage. Yeah.
negotiate and engage with the buyer, and hopefully try and put together a deal,
Yeah.
whether it's in line with where the seller is. Most times it's lower than where the seller had originally thought they were going to sell the apartment. But if they're real sellers and they need to sell, they've
Yeah.
got to go to the
Let's be
marketplace.
clear, we're not out of the woods. It's not like, oh, everything's great, but it's trending in the right
It's better.
way.
Yeah.
It's better. I think we still are in for some tumultuous times given the state of politics and such through November. So
Yeah.
I'm still expecting that.
Nobody can foretell the future, but Manhattan is a very big market. We have a market. Sometimes the market is more fluid, as we saw in 2021, where many, many, many more deals were being done. Other times, less deals are being done, 2022 into 2023. And so I say people are always dying, they're divorcing, they're moving into the city, they're moving out of the city. It is a marketplace. So we are encouraging the sellers list the apartments. If they're being realistic in terms of their prices, we have people who are real sellers coming into this marketplace, and there are buyers waiting for good apartments to come on
Yeah,
the
I mean, it's
market.
always subject to the property, to the situation.
Yes.
You know, you have a tenant in place and you don't need the money to move it somewhere. If, is it going to be if the trends continue the way that they've started in Q2, I would say we're at least moving in the right direction.
Sure.
And I think that springtime is going to be optimal, just sort of generally speaking. But it does not mean, as a seller, if you have motivations to move the property, that it's not like you're going to get 10% more in the spring. And that's what you always got to bring it back to. Okay, well, because you still have to carry the apartment, you still have to, or the property. So you have expenses, you've got the pain in the neck factor. If you have a tenant, you've got, all the other factors that statistics don't quantify for us. So you always have to take that into account.
Mhm.
And now is still a good what the stats are showing us is that now isn't necessarily a bad time to sell an
Right.
apartment
Right.
if it's the right situation. The last statistic we're going to talk about is
Is
the months of supply,
That's
which
correct.
is
Go for
also
it.
called absorption rate. Just like the other statistics we've talked about, the trend there is a decrease in the months of supply, which means if you take a snapshot in time, you've got X number of properties, how many months, and X number of contracts being signed on a monthly basis. How many months does it take to absorb X number of properties? Months of supply now is 9.2 for Q2, which is down 11.5% from the previous quarter and down 8% from the previous year, from
And
Q2
yet,
of 23.
and yet we saw increase of inventory. So
Yeah.
we saw a 16.8% increase in inventory between the quarters, and only a 4.2% increase year over year. So even though we saw increased inventory numbers, the absorption rate is coming down.
Yeah.
So that
Which
means,
means more
again,
things
that
are
goes to the
happening.
point. More
Yeah.
things are happening. Sellers are becoming more in line with the marketplace, which is great. And
Yeah.
buyers are making bids. The 9.2 month supply absorption rate is only 0.8 months higher than the 20-year average of 8.4 months.
Yeah. Again, that return to whatever we call normal, but at least statistically normal.
Exactly.
Yeah.
Exactly. So I think we've done it. So I think
We had a lot to relay. So
Absolutely.
we
New
in terms of all
beginnings,
the new
right?
stuff. So yes,
It's great to see you.
good to see
So
you.
great to see you. And
Good to
thank
be
you all
back
for
in the
tuning
saddle
in.
and
Yeah,
in our new podcast studio.
absolutely. So
It's
for
ours.
now, thank you so much for tuning in. Be healthy, safe, and most of all,
Remain in gratitude.
we'll see you next time.